Moving on, as expected, the Reserve Bank of India kept the key interest rates unchanged in its first policy meet after the union budget this year. This was the 10th time in a row when rates remain unchanged. In this era of uncertainty, RBI expects India's GDP to grow at 7.8% next year. RBI Governor also mentioned that India is headed to become the fastest growing economy in the world. On inflation front, he said that we need to monitor crude oil prices going forward. And as far as current data, retail inflation is seen at 4.3% next year versus 5.3% this year.
Overall, taking into consideration the outlook for inflation and growth, in particular the comfort provided by improving inflation outlook, the uncertainties related to Omicron and global spillovers, the MPC was of the view that continued policy support is warranted for a durable and broad-based recovery. On balance, headline inflation is expected to peak in Q4 21-22, that is in the current quarter, within the tolerance band, and then moderate closer to the target in the second half of 22-23. Providing room for monetary policy to remain accommodative.
This was the expectation of most economists, that there won't really be any change in the key interest rate. So that hasn't really happened. So whatever was announced today was pretty much in line with expectations. But let me simplify this thing for you. Now, what does it really mean if the RBI decides to not tinker with the key rates, be it the repo rate or the reverse repo rate or other rates that it deals with? It simply means that your EMI, your monthly EMI, is not going to change with this particular policy announcement. Neither it's going to go up nor it's going to go down. So that's one. So that's a good news. But there's a bad news also, because if your EMIs will not go up or down, simultaneously the interest that you earn on your savings, the money that you keep in your bank accounts, there is an interest amount that you earn from the bank. That interest rate will also not be changing. So, the expectation was that if the, rates are increased by the Reserve Bank of India after this policy today, then these two things will be impacted, your monthly EMI and your deposit rate. So that was the biggest takeaway of this particular press conference of RBI Governor Mr. Shaktikanta Das.
Now, another important piece of news for crypto investors. RBI Governor has cautioned crypto investors, stating that they are staking their money at their own risk. RBI Governor added that cryptocurrency has no underlying asset.
मैं ये कहना चाहता हूं संक्षिप्त में, जो इन्वेस्टर्स क्रिप्टो करेंसी में इन्वेस्ट कर रहे हैं, उनको ये माइंड में रखना चाहिए कि जो भी वो इन्वेस्ट कर रहे हैं वो उनके खुद के रिस्क पे कर रहे हैं. दे आर इन्वेस्टिंग एट देयर ओन रिस्क. उनको ये भी माइंड में रखना चाहिए कि ये जो क्रिप्टो करेंसी है, इसका कोई अंडरलाइंग नहीं है, नॉट इवन अ ट्यूलिप.
RBI has been cautioning investors since a few years now through their notifications. So this is nothing new. However, it is not to be compared with the tulip bubble, which happened in the 17th century, because we've come a long way. This has an underlying technology, which is a network, and mostly everything, any monetary instrument has underlying asset, which is basically the consensus, right? So if we agree that gold has certain value, gold, and everybody agrees in the room that gold has that value, that means it has a value. Whereas on the rupee note, it says, "I promise to pay the bearer." Here, the RBI is taking the responsibility to honor that 100 rupee note or whatever rupee note we are using. But in crypto, it is backed by the internet, and that internet uses blockchain technology. So blockchain basically validates each transaction, and it's a global network. So here, the consensus is coming from the internet. So I am disappointed with Mr. Das saying this, because he's comparing it with the tulip bubble without understanding the technology.
RBI governor has made it very clear that, there are crypto investors in the country. They need to be very, very cautious. They need to invest at their own risk. Now, if you heard him properly, then, he had used the word tulip. So that's something that's very interesting. Let me just take 30 seconds to explain to our viewers why he referred to the word tulip when he was talking about crypto. In 17th century, in fact, there was, some kind of a financial bubble, tulip bulb bubble. At that time, the prices of the tulip bulbs, they went up sharply because it was in fashion, that bulb, and then suddenly the prices collapsed. But at that time, when people were putting money, they were at least getting a bulb in return. What the RBI governor today is trying to tell us is that when you're investing in crypto market, you're not getting anything tangible in your hand. There is no coin, there is no paper that will give you an assurity that, if something happens tomorrow, you can use this and get your money back. So there's nothing that you are getting in return when you're putting money into crypto segment or crypto world in the country.